So yeah, guys, you got to understand that what we teach you guys, this concept works for anything. It works for stocks, foreign exchange, cryptocurrency, right? It's because you guys got to understand that the biggest players in these markets, as I keep telling you guys, right? The top 10 currency traders are the banks, right? The banks are the biggest traders in these markets. So think about it. These banks, they're able to manipulate the markets to where they make retail traders like us lose all the time. And that's why it's a common fact that 96% of retail traders lose in the market and end up quitting. And that's the same exact reason why, is because the banks manipulate the market all the time, right? What the market has to do is fuck people over, right? Take your stop losses for them to make their move, right? They have to take out their people's stop losses because they have to collect our money to make their move, right? Y'all gotta understand that little concept, and that's why, again, as I said, it doesn't matter what market you're trading, stocks, crypto, foreign exchange. When you understand our concept, when you understand our concept of what we trade, we call this smart money, right? We call it the smart money concept because we're following how the banks trade. The banks leave footprints in the market, and we're able to understand where they leave these footprints, right? And as I say all the time, it's always these point of interest, guys. All right, take notes on that. It's called point of interest, POI, right? POI, points of interest, right? Just like how we have this last down candle that fucked everybody over. This was our point of interest. Why was it our point of interest? Because think about the masses, right? Think about 96% of traders that were trading all in here, right? Think about how many people seen this support, right? That's what they call it, support. When they see support, what do? They buy it, right? Think about how many billions of traders can see this and they bought it. Now think about where their money is sitting, where their stop losses are sitting, right? That's what we call it.
Wait, your screen looks zoomed in. I don't know if it's my phone.
My screen is zoomed in.
Like for me, like I don't know if anyone else sees it. Like,
Guys, how's my screen looking?
It looks fine to me.
Okay,
It looks fine.
Okay, let me change my thing. Hold up, I'm gonna leave and come back.
All right. Y'all gotta understand, guys, that equal highs and equal lows are not our friends. They're our targets, right? Because you gotta understand, what can the 96% of traders see? Why would you want to trade with the 96% of traders, right? You got to trade against the 96% of traders. That's what the banks do, right? So we call this area liquidity. What is liquidity? Liquidity equals money. Money equals stop losses or buy stops slash sell stops, right? We all know what buy stops and sell stops are, right?
Yeah.
Right? We all know what stop losses are, right? Think about it. Every single trader that we're buying in here because they seen support, right? They seen support. Think about it coming right back again. Now, how many other traders were buying it? And then it comes to a third time, right? I'm sure for people that's been in different groups, they tell you buy triple bottoms, right? Sell triple tops, buy M's, buy W's, right? But think about it. If the masses are taught to do that, what makes you think that's the right move, right? Now think about where the money is sitting. All below in here, right? All below in here. So what does the market do? It trashes them, activates those sell stops, because right? You got to understand what are sell stops, right? Just like what are market execution, what are buy limits, sell limits, what are sell stops, right? Sell stops are people, retail traders use sell stops below, they use sell stops below support, right? Because they think that it's going to break out, their sell stops are going to get activated, and then they think it's just going to continuously drop, right? So sell stop is nothing more than liquidity. So now think about it. We get that triple bottom, everybody's starting to buy. That's why you see this reaction, because retail traders are buying. Then price tanks. It tanks below. It gives us that last down candle, right? What did it do? It stopped out everybody buying in here, right? All the money that was sitting below, took them out. And how do we know? How do we know institutions were behind this play? Because price flies right after and comes back to the same area where retail traders were trading. It stopped them out and flew away, right? And we always identify that candle that did its thing. This was that candle that did its thing. What confirmations do we know that candle did its thing? It fucked people over, it took out stop losses, and it flew, right? And it flew. Sometimes you might not catch this spring down, but it always, always, always gives you the opportunity to get it to re-enter in the market, right? Again, that's why we imply looking at multiple time frames, right? Because think about it, retail traders, they love trading off of 15-minute time frames, but what does 15-minute time frame has? What does it really show us? It don't show us too much, right? Again, you guys gotta understand. Whoops, my laptop's gonna die. Wait, can you see? You can see it, right? Okay. Right, so this candle fucked people over, right? So we mark up that candle that fucked people over, right? And as I tell everyone, where do we like to play off these candles that fuck people over, right? Hala, where do we play off these candles?
The 50% mark, and at the
open.
At the open.
At the open of the candle. Remember, when it's a bearish candle, meaning a red candle, the open is at the top. When it's a bullish candle, the open is at the bottom. All right.
Mm-hmm.
So what do we like to do? We like to play off the open of the candle, and we like to play off 50% of the candle. Right? That's what we like to play off. Why did this move happen? Right? Why did it take everybody out and quickly run away? Well, that's because, again, you got to think about the bigger picture. The banks purposely do this, right? This last down candle, this red candle, this was the bank purposely. They are purposely, again, the banks trade with billions and billions of dollars, right? They purposely sell, again, we're speculating, 100 million lots, right? They were selling all in this 4-hour candle. They were selling. And once that 4-hour candle closes, because while they were selling, they were buying, let's say 5 million lots, right? That's how they have to trade. They have to sell to buy, because they cannot trade like us, right? They cannot trade like us. They won't have a good portfolio, right? So Once that 4-hour candles, while they were selling, they were buying. So that's where you see price quickly run away, right? Price quickly flies. That's how we know this was sponsored by institutions when price fucks people over and it quickly runs away. This was sponsored by the institutions, right? But they were in drawdown with the 100 million lots, right? When I mean they were in drawdown, they were in negative, right? They were in drawdown, but it doesn't matter because they were making money off of the buys, right? They were making money off of the buys. So did it matter if they were in drawdown? It didn't matter. Whoops, my bad. Let me take that back. It didn't matter if they were in drawdown, right? They were making money with the 500 million lots. Now look at it. Price comes, it does its thing. It always, always, always comes back either to the 50%, top of the candle. It gives us that opportunity to snipe it with minimal drawdown, right? Why did it do this? Why did it react off of the area that I said and it's now trying to push higher, right? Remember the drawdown they were in, the 100 million lot drawdown? This was their 100 million lot rescue mission, right? This was their 100 million lot rescue mission. So think about it. Think about them taking away 100 million lots. Wouldn't you think that price would react heavily taking away that huge amount of money in the market? That's why you see price then react so quickly, because they rescued their drawdown, right? Meanwhile, they do it over and over and over again. They don't just do it in this candle, right? They do it everywhere. They do it in this candle. They do it all in here, right? But when you see candles like this, you know that this right here, oh my God, this dog is annoying. Hold on, guys. Whoops. Let me just delete this. Hold on, guys. Give me a second. My bad. But yeah, my bad, guys. Yeah, they do it everywhere, right? Everywhere. But when we see candles like this last down candle that fucked everybody over, we know that this, this, hold on, guys. Someone's coming down. Yo, my bad, guys. Got a couple more students. But so we know that this was the area, right? This is the zone that we're trading in. And you could literally trade in between all of this area. Why is this the zone that we're trading in? Well, this was our 4-hour candle that fucked everybody over and reacted. And so was this candle right here. This last up candle that took everybody out before it gave us that swing low, right? That could be a potential sell, right? And where do we like to play off? In the open of the candle, 50%, right? That was the candle that did its thing. It fucked people over and then the market turned, right? And then the market turned. And I'm gonna show you guys here why I drew this thing right here, just to kind of give you guys a clear picture of how it works. Actually, let me delete this. Y'all can see this?
Yeah.
Right, y'all can see that, right? All right, so think about how the market works again. I said that's what I just showed you guys with the institution traders, how they trade, right? So this was our last down candle before price. Why is it not letting me move this? Oh my God. Hold on, give me a second. What the hell? All right, there. So this was the last candle, down candle, before price quickly ran away, right? It quickly runs away, and then it comes back down. But let's say it didn't come back to this area. It gives us a gap, right? We call gaps imbalance in the market, right? That gives us a confirmation that this is even more valid, right? What gives us even more confirmation is that it gives us what we look for, right? Where retail traders are trading, M's, right? What did I say these are called, right? Equal highs and equal lows are not our friends. They are targets, right? Because again, think about it. Where's all the money sitting? Up above here, right? Whoops, those are S's. All right, that's where the money's sitting. We have an imbalance below. Remember how the market works, right? There's an IPA, right? IPA meaning a price algorithm. So they don't like imbalances in the market. Imbalance meaning gaps in the market. Oh, and I left. But again, so now this gives you the identification that price comes back, right? Where do we like to mark it up? Top of the candle, 50%. Why? Right? It's because most traders are trading in the body of the candle. So what happens? Price comes down, hits our 50%. That's where you see price then take off. That's how you know institutions got behind this move, right? It was in drawdown. They mitigated out of the drawdown. Mitigated meaning that they rescued their drawdown, and price then flies. That's what shows us that institutions sponsored this play, right? Where do you play off next after this? Well, now we got our structure, right? This was our whole structure right here, right? It's so basic, guys. It's so basic. This is our structure. The market has to come back and test that structure. Market comes back, tests that structure, then it does its thing again, right? It does it over and over and over again, right? Y'all understand this?
Yeah, I'm seeing it.
Y'all understand it, right, Hala?
Yeah, kind of, yeah.
Right, this was the whole retest of structure, right? And I can show you guys, oh, it's everywhere, just like if we go back on Bitcoin, right? This was that last down candle that did its thing. We play off 50%. You're able to snipe it. A little bit of drawdown. What are we risking? Right? We risk right below the body or on the wick, right? And what do we target? We target equal highs, right? Because what do I keep telling you guys? wherever price is flat, there's money trapped, right? Think about it. This candle literally came above these equal highs and it fell over because it took enough money for it took enough stop losses, break evens, people that are putting their stop losses and break even, they take them out, price reacts, right? This is our, and if you miss that, right? If you miss it, it gives you the opportunity again, right? 50% of this last down candle, because again, think about it. This was the last down candle that took out equal lows, that mitigated out of that 4-hour candle. It went up. You could have caught it under 50%. I personally have a buy on this. Right? Y'all could have caught it right there. It always, always, always gives you the opportunity to get in again. There's no point of having FOMO, fear of missing out, right? It always gives you that opportunity again. And then what happens after we break structure? We can definitely get a play off of here, right? Or this last down candle before it skyrocketed. Where do we like to play? Top of the candle, 50%, right? Where would our stop loss be? Same exact place all the time. Below, right? Then you target equal highs. It does it everywhere. It's so repetitive, right? All the way up here in this candle. It plays off. It does its thing, right? It's not a coincidence. And again, when you understand these concepts of how we trade, you can trade in any market, stocks, crypto, forex, gold, anything, right? It's repetitive. It's literally, it does it all over again, right? We can mark this 50%. You would have sniped that with no drawdown at all, right? What were you risking? Could have risked it from the top of the candle or the top of this to be safe, right? Where's your targets, right? All right, this is the next thing I'm gonna show you guys. Imbalance, all right? Imbalance in the market. You guys understand the whole concept of the point of interest, right?
Yeah.
Right, let me know if y'all have any more questions with point of interest, if it's something still that kind of gets you confused. Like, let me know. Holla. Leo.
I get it.
Yeah, I'm okay.
You're okay with it? Because it's literally everywhere, right? You guys just got to understand that the bigger the time frame, it's more likely going to be a way bigger move, right? Because you can see this stuff in the 15-minute time frames, but you got to understand that the 15-minute time frames, right, it's not that efficient, right? Then the hourly, then the 4 hours, 8, 10 hours, daily, weekly, right? Because it's everywhere. You get that last down candle that fucked everybody over. You play off that 50%, price flies. It does its thing, right? It's literally repetitive that it gets so boring. You know what I mean? Trading shouldn't be fun. It should be boring, right? And so now I'm gonna talk about imbalances, right? If we go back and rewind this, what is an imbalance? Leo, what's imbalance? Do you know?
When there was like for example that bullish candle, like it was just straight up buys. There was no selling.
Exactly. There was an imbalance in the market is when only one side is offered. So when we take a look here, only buying was offered in this candle. Even if we look at the smaller time frame, we could see that only buys were offered here, right? That's an imbalance in the market. Again, as I said, the IPAs, the international price algorithm, doesn't like these imbalance in the market, right? Just like how you see here, we have green candles, red candles, green, red, green, red, green, red. This is good price action. This is not. So what do you mark up? You mark up that last candle. It gave us an offering for a sell. Same as this, we could obviously agree that this candle came down in here, offering sells, same as these candles down here, and we drag it along. Where do we like to play off? Same exact stuff that I teach you guys, 50%. Y'all could play off the 50% imbalance, right? Y'all got to understand that imbalance in the market, gaps in the market, they give you the opportunity to take profit. They give you the opportunity for entries in the market, right? Just like if you were selling this down, this could have been a take profit, right? What happens? Price plays. Oh, look at that. We just missed it by just a little bit, right? But it gives you that opportunity again to re-enter, right? Those are imbalances. It has to fill in imbalances as much as it can, because algorithms don't like imbalance in the market, right? And it's like it's just repetitive, right? I mean, we can take a look at AJ. This just happened today where we missed this entry. It literally wicked my it literally wicked this in and just dropped, right? Because think about it, before all this happened, we were literally trading in a gap, right? This was the last time selling was offered, right in here. We were literally trading below this gap, right? Look at it. This was just a straight down candle. So what happens? You could have took your 50% again, or below, right? But we like to implement 50%. Price place. Boom, it hits that 50% and it drops, right? We're literally still trading. Now we're just trading in the gap, right? What's our point of interest? Right? Think about it. What's our point of interest? This last up candle that fucked everybody over. I'm personally looking for sells in here, right? We literally just traded below it, right? Why did we trade below it? Why did we trade below it? And it just did this, right? To tease us and came down. Because this was in balance, right? This whole up candle that just randomly shot up, this is an imbalance in the market, right? It comes, it fills in the imbalance, and it starts doing its thing again, right? It always has to fill in these imbalances. Maybe it won't do it right at the second, but it always has to fill in imbalance, right? And I just like to keep showing you guys that it's literally just clockwork, right? It's everything is just so repetitive, right? It's like this whole candle. This was the last down candle. It doesn't matter if you missed that. How do you know institutions were playing? Price quickly runs away. What does it do? It tests it again. It gives you the opportunity. I personally bought this right here, right? It does it again. If you missed that, remember the whole test of structure? It gives you the opportunity again to buy it. If you miss that, that last down candle that fucked everybody over, I mean, this just missed a bit if you tried going 50%, but if you tried on the body, right? I personally caught this on Sunday open. People probably tell you guys don't trade Sundays. It doesn't matter if you know what you're looking for, if you know how to follow the banks, right? It does it again. I personally bought this, right? This was the quickest $300 I made in 2 hours, right? It's like it just does it again. It's so repetitive. You guys just got to understand points of interest. Y'all just got to understand, again, it does take some work, but y'all just got to put some time in place, right? Y'all kind of understand me?
Yeah.
Yeah, sort of. Yeah.
Well, let me know what you're having troubles with, Hala.
Well, no, I get it. Like, I just like I feel like I just like like I have to like drain it in my head more. Like get
Yeah.
more familiar with everything and stuff.
No, I feel you for sure. Trust me, you will someday get it, right? I know some say they have troubles finding points of interest, right? And that's the thing. That's why you always gotta look left to look right. I mean, look left to get right, right? It's like this whole explanation that this whole demonstration right here that I show everybody. Where is that? I love to show this to everybody just because it's so perfect. It's so perfect, right? On a bigger time frame, on the daily, right? I know I probably showed you guys this so many times, right? It's like we've been so bearish, right? There's no significance that there's any bullishness happening in this market. But what was that candle that did its thing, that point of interest, right? Well, this was that point of interest we were looking at. Why? Because this was the last down candle before price gave us that swing high, right? That was the last down candle before price gave us that swing high. So what do we take? We take our top of the candle. We take our 50%. Guys, if you were swing traders that trade off of the daily and the weekly, y'all could have had limits running. Price place, it literally hits the top of the body. Where are we aiming for, right? What's our target? Equal highs. Price place gives us that what we love to look for. That double top. We know that this is a target, right? We know that there's money sitting above. We know this is a target. Price place, boom, it goes just above it and then it drops because it took out enough liquidity. But before it drops, it gives us another double top. So now we know money is sitting above here. Price plays below, comes to our 50%, it reacts. You would have had like a 10 pip drawdown. That's it. And what are we targeting? Equal highs. It comes above the equal highs. And then it drops, right? You guys literally risk 10 pips, right? 10 pips of drawdown to make 200 plus, right? Think about that. Just because of this whole concept of point of interest, right? Then what happens when we were done taking money out of this point of interest? Remember what I tell you guys about these point of interest, the banks are in drawdown, right? But what happens when they're done taking money from that point of interest? Well, now that's invalid. Now this is nothing, right? Just price just gets trashed after that, still giving us that significance of bearishness, right? But it's like, guys, you just gotta train your eyes and see that it's just everywhere, right? It's literally just everywhere. It's just clockwork. Y'all gotta understand that there's no such thing as having FOMO. It always gives you opportunities to buy it again, to sell it again, right? But if there's something y'all want to go over, something that you are confused about, let me know. Let me know right now if there's something that you guys want to, a trouble that you guys have, even the smallest bit. If it's looking for supports or equal highs and equal lows, let me know. I want to be able to break down something with you guys.
I guess finding like more point of interest.
Finding more point of interest, right? So again, it's always just looking at the bigger time frame, right? What stands out to you, right? Just ask yourself, what stands out to you? Looking on the weekly time frame, looking on the daily, what stands out to you, right? You got to understand what trend the market is going, right? We know this was on a very bearish trend until price traded higher, taking out highs, and it started going higher, right? I mean, what's the point? What's our point of interest? I mean, all right, we see this last up candle before that swing below. This is a point of interest. How about we dig in deeper and see? So now we're on a daily time frame. Obviously, it's much different, right? What was our point of interest from here? Well, we had this last up candle right here. This last up candle that came above equal highs, right? To find good points of interest, you got to have your confirmation list in check, right? Did that candle fuck everybody over? Did it change the momentum of the market? Is that a valid point of interest? If it did that, yeah, it fucked everybody over. It gave us that direction, that turnover in the market. So deeper. What was that candle? Now we dig in deeper. Okay. Now we look at the bigger picture. We got this one candle this was that candle that fucked everybody over. It came down. Then this candle, what did it do? What did it do? Hala, what did this candle do?
The green one.
Huh?
Which candle? Oh, the
green candle.
Yeah, fucked everyone over.
It fucked everybody, but also it mitigated right off the 50.
Okay. Oh, okay, yeah, I see that.
Remember, this was the candle that fucked people over. It came above everything before the market turned, right?
Oh, okay.
What were they doing? They were in what? Drawdown.
Yeah.
Right? So then this candle now plays right off, gives you that opportunity to sell. And this market now turns over. This is a very good point of interest. Why? Because we've never played off in this whole time the market's been playing. It's never played off of here, right? What do we know? What makes it even better? We got equal highs. We got equal highs below our point of interest, right? This gives us the identification that this candle is very valid, right? There's money. We know that this candle has money trapped in this area. There's money trapped in this candle, right? Does that make sense to you guys?
Yeah.
Yeah.
That makes sense, right? Just wherever trapped money's sitting, trapped money is in here. We've never mitigated out of here. So that's a very good point of interest. Again, it's really, really just looking back in the market, seeing where positions are. Because again, there's daily points of interest, weekly, there are hour points of interest, right? It's like this whole 2-hour point of interest, right? This was the candle that went up above everybody before market turned over, right? So that gives us the identification that this was sponsored by the institutions because it fucked people over, it turned over. Y'all could have had limits running. Y'all could have been waiting, having an alarm, because it does it over again. You would have sniped the shit out of this. Right? I personally got an entry right here. And it's like if you miss that entry, all right, you look at an hourly time frame. What do? It gives you the identification, that place off right there. Another area to be able to enter. I'm gonna show you guys a picture. Hold on. Let me see if I can pull this up. My Telegram's loading. Let me pull something up. It's a GIF. Shit. I actually don't think I could be able to see it. Not to go like super high. It's like I don't even know how to search up that GIF. Oh shit, that's not it. All right, I can't find it. But it's like, it's just repetitive. It always gives you the opportunity to sell it again, right? And it's like, what are you risking? Even if you took this, you're risking so minimal for it. You're literally risking 18 pips. What are your bigger time frame take profits? All above these equal lows right here, which we accomplished, right? I'm personally holding this. We're up 200 pips now, right? It's like, it's just so repetitive, right? Just finding out points of interest in these markets. It's something y'all just gotta train your eyes to do. Oh, Sham says back. Who's Kiran? Yo, what's up, bro?
So, how you doing?
I'm all right. Oh, it's Kiran. Oh, Kiran, right? Kiran? Your name
Yeah.
is different, bro.
My bad.
Oh, what are you saying, bro?
My bad. Getting nuggets.
But yeah, guys, it's just really finding points of interest again, right? It's just literally clockwork over and over again. Points of interest, right? Stuff that fuck people over. Those people that trade equal highs and equal lows, right? Those are points of interest, right? Y'all gotta just understand, like, y'all gotta just train your eyes. But you guys have the concept, so it's just really just training your eyes of looking at where people got fucked over, right? It's like, I could just show you guys so much demonstration, right? It's like this whole up candle right here. This was the candle that fucked people over, took out equal highs, all the traders that were trading in here, and then it gave us that swing low. Where do you mark it up? Same exact thing. Why is this light flickering? Right there, 50%. What happens? Price place. Boom. Gave us that entry. Price place. Boom. Gives us that entry. Right? It's literally just so repetitive. right? And y'all gotta understand is when it does this, when it mitigates out of that position, it gives you another point of interest. Now this is your new point of interest because this was now the point of interest that came above. This was now the point of interest that just came above equal highs. And then it turns over. So what happened? What do you do with this point of interest, Leo?
You mark it up.
You mark it up 50%. Guys, I'm literally just, repeating myself. You know what I mean? Mark it up 50%. It does its thing, right? Where's your stop loss? Above this, you're not risking much, right? And what happens if you miss that? What's your next point of interest? What do? Hala?
You mark it up.
Open 50%. It does its thing, right? What's your next point of interest when it does that? This candle right here. Right? Y'all got to understand that it could come back to these point of interest. I mean, if we take a look in this candle, it missed it by its 50%, right? It literally missed it by 2 pips. But then price does its thing. It always does the same thing over and over again. Right? It's so repetitive, guys. These point of interest, they're on the top, they're on the bottom. It's just literally repetitive. Right? It's like y'all could have been buying it up here, but y'all know that you were selling it up here. You know what I mean? It's literally just repetitive. But yeah, guys, I mean, if y'all have any more questions, I know I just wanted to just quickly do a